I welcome Pablo Brait of Market Forces, who has joined our meeting today. We appreciate Pablo coming here today, and more generally, we applaud the visibility that his organisation is bringing to this very important issue. I now invite Pablo to move to microphone 2 to speak briefly to the resolution.
Thank you, Chair, for those words and for the opportunity to speak. I will speak very briefly today in favour of the resolution calling on our company to put short, medium and long-term targets in place for reducing exposure to all fossil fuels in its investments. The discussion's already being had about global warming and its existential threat to IAG, so I won't elaborate on that. We've heard mention that peril payouts show an increasing trend over time, not just gross, but as a proportion of net earned premium and gross written premium. And this, I think, should be ringing very loud alarm bells on the board, as it has for the investors that have supported this resolution. Now, insurance companies are responding to the effects of the climate crisis by refusing to insure high-risk areas, increasing premiums, and this is progressively shrinking our available market. And this refusal to cover ever-growing high-risk areas, or I guess pricing people out from being covered in these areas, is also increasing the risk that governments step in and regulate, which is another threat to our bottom line. Now, for IAG to have credibility in its push to see government and other corporations do more to mitigate and to adapt to the climate crisis, we need to be doing our part by not making the problem worse. Now, the biggest drivers of global warming, as you would all know, are the coal, oil and gas industries. The science is clear that these industries need to be phased out as soon as possible. And IAG's official policies and public transparent policies need to demonstrate this. Now, IAG already has a strong underwriting policy, which will see it refuse to underwrite any fossil fuel project, by 2023. In investments, however, while the trends seem to be going in the right direction, there isn't enough information being provided for investors to truly understand IAG's fossil fuel exposure and therefore how it is managing its own exposure to transitional climate risk. This means that investors are currently unable to determine IAG's actual coal, oil and gas investment exposure, nor its expected trajectory or what companies are captured by IAG's terms. Terms like higher risk companies or most contribute to climate change, for example, remain undefined. And the Chair has committed to publishing those definitions, so I really am looking forward to that. The objective to, quote, shift investments to companies that have a lower exposure to climate-related risks or a forward-looking strategy to manage these risks remain frustratingly vague. And so the real-world outcome of this lack of transparency is that IAG very likely remains invested in companies that are actively undermining its own objectives on climate change. And there's nothing in official policy, public, transparent policy, to ensure its exposure to these destructive companies won't go back up at any point. Now, earlier in response to one of the questions from a gentleman over there, the Chairman said 0 is where we're looking to go with regards to fossil fuel investments. And so really what we're asking is for that aim that was, revealed and mentioned today to be, I guess, put into official IAG policy. So to conclude, while IAG has taken some positive steps on fossil fuel exposure, particularly in underwriting, it's up to us investors to insist that it transparently and coherently deals with the risk present in its investment portfolio. Setting clear targets for reducing fossil fuel exposure in its investments would afford our company increased credibility among its peers and in the public domain when calling for action to be taken on the climate crisis, and send an important signal to markets that an urgent transition to a low-carbon economy is necessary. Thank you.